Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darison Charles, because today's the 3rd of March 2021. So yep, welcome everyone. Welcome to this Tuesday, Tuesday's Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so just before we go ahead further, so I hope you can hear me, guys. Okay, you can hear me loud and clear. Was having a few issues recently with the sound, so hopefully there are no disruption, hopefully everything's okay. So, as always, before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So, yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So, I can see in the chat room we have a good morning from Kirsten, and good morning to you too, Kirsten. Hope you're having a wonderful start of the day here. So, jumping into the charts, the first one I want to pick up here is the Shanghai Composite. The index closed nicely in the positive territory, and most importantly, and if you remember yesterday I talked about this index, and what I said that if we continue to see the index trading above this upside line drawn from the low the 19th of March, then yes, we could get a nice maybe push back up here. However, for me to get a little bit more excited with the upside, I would prefer to see maybe a push back above this little hurdle right here, the 3,568 territory, approximately around here, marked near the low of the 25th of February and near the high of yesterday. At the same time, if we get a push above that area, we could see the index, the price moving above the 21-day EMA, which could also kind of bring a bit of positivity in all this. So, for now, I mean, you can see that we got that break here, we got that move above it. So, yep, I'll stick to slightly higher levels. I'm not going to say that we're going to go here all the way up again, but maybe, at least maybe. Let me just actually get rid of this level here. Maybe the next target here could be this one right here, the 3,637 territory, marked by the high of the 25th of January, which is also the highest point of January, and is not far from the closing price here of the 23rd of February and the closing level here of the opening level, sorry, the 24th of February. So good potential target. Let's aim for that one first, and then we'll take it from there. Jumping into Hong Kong's Hang Seng Index. The index is still open, still running, also running in the positive territory. So in a way, everything's kind of looking good here for Hang Seng. Now let me get rid of some of these lines here, no longer valid. I'll get rid of this upside line here as well, but I'll stick to this one for now, just to see how it's gonna play out here in relation to this upside line. Now, of course, the level that I'm keeping an eye on here is the 30,191 territory, marked by the highest point of January, and a nice pop above this. That's what we need to see in order to go for some higher levels, in order to go for that highest point of February near the 31,183 zone, and then we'll take it from there. But if it continues to struggle, let's say, to overcome all this area, well, I mean, I'm not saying that I'm going to be bearish, but of course there could be a chance to see maybe a bit of a decline. However, don't get me wrong, again, it's a tricky spot here for Hang Seng. I mean, if other indices are a little bit more clear, this one is a little bit on the cautious side, I would say. So But again, let's wait for that confirmation break first. Let's not rush into anything yet. For the downside, of course, what you could do is keep your eyes on the low of the 26th of February here, which is also the lowest point of February, if I'm not mistaken. Let me just, no, sorry, that's just the low of the 26th of February, near the 28,980 zone. And the drop below this could lead to a test of this upside line drawn from the low of the 30th of October, and then we'll take it from there. The German DAX. This is where the interesting bit came in yesterday. I mean, the index was showing good signs. It was moving higher. It was pushing to the upside, but it got held here by this downside line. So in a way, we could say that yes, I mean, this of course makes us a little bit cautious. However, if we look at the cash index, I mean, if we look at the after hours trading, the futures market, then well, you'll see that the index rallied further, and currently we're sitting around the 14,112 zone. So we're basically pushing further north. We're above already yesterday's high here. So yep, we'll have a nice opening gap here to the upside above this downside line, which means that there is a good chance we could see a test of the all-time high near the 14,169 territory right here, which was reached in the beginning of February, and then we'll take it from there. Of course, let's say on the cash index we do have a slightly higher level. The level is around the 14,190, but yeah, let's look at the main kind of trading hours for now. So my next target is the 14,169 zone, and then we'll take it from there. If we get a break above it, of course, this will place the index into the uncharted territory, because looking at this monthly picture, you can see that yes, this is the all-time high, and let's see if we can reach another all-time high. So yeah, let's wait for that one, guys. But again, I'm leaning a little bit more towards the upside, as long as it stays above this downside line, above the 14,050 territory right here, the one that I spoke about previously. DXY, very quickly on this one. So a bit of a disappointment here for the bulls. Now this is one of those examples where I say, guys, to that wait for that daily candle. So the situation, what happened yesterday basically here. So we had a nice push here on Monday. We broke above this area, but we failed to stay above the 91.05 territory. Yesterday, during my morning video, we were already pushing higher, and I said to you guys, yes, I'm kind of leaning a little bit more towards the upside because we were above this 91.05 territory, I mean, the next target was this 100-day EMA, which we managed to reach. But then, of course, keep your eyes always on that daily close. And you can see this is the reason why, because it reversed back down and drifted back below this 91.05. So overall, if we even take a look at the weekly candle right now, we'll just see a nice false breakout. And we don't need to even go to a weekly chart. We can see the false breakouts here. So that's why, guys, always be very careful with this. And what I'm kind of looking right now at, and let me just get rid of this downside line, no longer needed. What I'm keeping an eye on right now is this is something that I don't want it to happen, but again, let's see, because for now it seems that the index might continue oscillating a little bit around this 21-day EMA and move sideways, and basically what could happen, we could see a drift maybe lower, and basically ending up getting ourselves here a possible range. But again, that is, of course, if this barrier, the 91.05, continues to provide resistance, and if we see, let's say, a drop now, a test of the 21-day EMA, which is quite possible, to be honest. If we see a test of this 21-day EMA and then we see a break below it, then yes, of course, I'll aim for that idea of seeing maybe a bit of a range here. But because that's why I have the downside scenario for me, let's say, to get a little bit more comfortable with the downside, only from around here, from around this 89.96 zone, and then kind of we could go for some lower areas. All this area here could be a neutral one, and like I said, it could potentially maybe form even a possible range here. But let's not get ahead of ourselves. First, let's keep an eye on these two levels. These are my main ones, and and then we'll take it from there. And again, daily candle staying either above the 91.05 level or below the below the 89.96 territory. That's what's needed in order to consider the next kind of short-term directional move. Brent oil, haven't looked at this one for quite a while. So after breaking this upside line here, tentative, but broke it. Yep, we've drifted lower, and now we are near some key support levels. So we're actually, I would say we're below this one of the support areas here, the 62.80 zone. We are now resting on this 21-day EMA. The 21-day EMA did provide very good support, and this is what I kept saying to you guys previously, that even if we see a retracement, all eyes are on this 21-day EMA because it continues somehow to do its job here. Even if you look historically, we do have these kind of nice reversals here from the 21-day EMA. So basically, long story short, as long as it stays remains or should I say, as long as the daily candle remains above this 21-day EMA, then yes, there is a chance for this one to drift back up. But if we get a drop here, and this is why I've picked up on this little level right here, the 62.12, if that's the low of the 19th of February, if we see a drop below that area, now that's where we could go for a bit of a larger correction to the downside, because don't forget we're still trading above this upside line drawn from the low of the 16th of November, and then we'll take it from there, guys. Because again, something for you to keep in mind as well is, and probably you already know that sometimes I do kind of go a little bit into the future, or at least try to go into the future. Basically, what I'm saying here is that if we see a rebound from this 21-day EMA, we could go for a bit of an up move here, and maybe a test of this 64.4950 zone, approximately around here. And if the price stalls somewhere around here and then reverses back down, then basically we will be getting ourselves a possible head and shoulders pattern here. Yep, we could see maybe this whole support area being as a neckline, and then we could basically ignore this upside line. We could, because if the neckline gets broken, then we could see a push further south. But again, that's a little bit of me getting ahead of myself. We sure first need to see a right shoulder before we could kind of even consider that this scenario. Now, in terms of the upside, I would probably wait for at least a push above the 66 barrier, somewhere around here, and then kind of go for some higher levels. Silver. So silver, I haven't looked at this one for quite a while, but yep, it's quite interesting as well, because gold, as we know, it is drifting heavily to the downside. Heavily to the downside, silver continues to kind of respect some of its upside lines here. Now, initially, it kind of we were considering this one as a bit of a tentative one, but to be honest, I mean, so far so nice, so far so good. It's still finding kind of it's still kind of respecting this one drawn from the low the 30th of November. Yes, we did yesterday get a bit of a break here. We dropped lower, but as you can see, the daily candle is still reversed and remained above this upside line. So long story short, as long as this upside line, this shorter term one, it kind of continues to hold, then there is a good chance for a move back up. Now, previously for the upside, I talked about this 27.92 territory, but the way looking at it, the way it is kind of trading right now, I mean, probably we could even start looking at the upside if it pushes above the 27.07 territory marked here by the high of the 1st of March. At the same time, we would get a nice push above the 21-day EMA, and more buyers could see this as a good opportunity to step in. And of course, a push above this 27.07 will confirm a forthcoming higher high for March. Because this would be a new high for March. I mean, yeah, we could still go for these highs, February highs, but for March, this would be a new high. And yep, and then we would take it from there. For the downside, I would prefer to see a break of this medium-term upside support line drawn from the low of the 18th of March before examining the downside. But so far, we're not really getting that. Ripple. Ripple, haven't looked at Ripple for quite a while, but basically it's a mess. Yep, unlike other cryptos which are, let's say, having good runs to the upside, I mean, Ripple is kind of moving sideways, and understandable. I mean, that's for obvious reasons. It did have some issues with the SEC, so that kind of reflected in the rate here. So of XRP USD. So for now, basically, what can we do here is, first of all, we'll keep an eye on this little short-term tentative downside line drawn from the high of the 1st of February. Even if we see a push higher, this still could be seen maybe as a temporary correction before another move lower. On the other hand, maybe we could be seeing here a possible kind of triangle here. So in a way, I mean, either way, guys, I mean, still it could be moving sideways here, coiling up a little bit before. And if you want to, excuse me, if you want to, let's say, consider maybe a kind of a more of a directional move here, at least a short-term one, still a breakthrough one of these lines through the downside line or through the upside line would be needed. So yep, keep your eyes on that one. For now, like I said, it's not much here, but again, Ripple is not really giving us much, and that's why I'm going to try to play it safe and wait for a breakthrough one of these lines. Litecoin. So Litecoin is popping nicely to the upside, and yep, demand is picking up here, and we're moving back above this 185.75 territory. So again, I'm gonna stick to the same strategy that I always use. I would like to see the daily candle remaining above this area before, let's say, getting a little bit more excited with the upside. Because again, if by the end of the day this reverses back down and just we'll end up having something like this one, what we had here on the 25th of February, like a false breakout, then, I mean, yeah, we're back to kind of aiming for this upside line drawn from the low of the 11th of December. But if it stays above the 185.75, well, I mean, my next target could be this 213.73 territory marked by the inside swing low of the 20th of February. AUDUSD. So jumping into a few pairs very quickly, and of course here AUDUSD is trying to make its way higher. I mean, the risk on sentiment kind of has picked on again. It seems that the pair is willing to travel higher. However, again, I will probably stick to the same idea because I would like to see the daily candle staying above the 0.7820 zone right here, because yes, we keep getting these overshoots, but we don't really get that for now. I mean, maybe it's going to be today. If we do see that candle staying, then my next target here is, let me just adjust this a little bit. This is no longer needed. This is no longer valid, probably. The main target here will be this one right here, the highest point of February near the 0.8007 level, and then we'll take it from there, guys. But again, I would like to see that daily candle staying above this 0.7820 zone before getting excited with higher levels. By the way, I can see there's a comment here. Voklu, US 30 cash. I will pick up on US indices. I normally do pick up on US indices during my trader's tea time. So today I'll pick up on that one. Yep, no problem. Yeah, but coming back to the charts here, USDCHF now trying to make its way higher. However, if you remember, I talked about this one yesterday, and basically the idea here is still the same. In order to go for some higher levels, a push above the 0.92 territory here, and also a daily candle staying above this area, that's what's needed in order to go for the upside, for further upside. There is of course a lot of indication here that we could go for some higher levels. Of course, the fact that we are trading above all of these EMAs, so yep, that's kind of wonderful news. But yesterday we formed this little kind of shooting star here, doji, I mean this kind of mixture, that's why I'm gonna be very careful. Yep, Boklu, you're welcome. So yep, I'm gonna be very careful here, and yeah, for now, I mean, yes, the fact that it's trading still above the 200-day EMA, that's okay, that's wonderful. However, to be a little bit more on the safe side, I would prefer to see a push above this 0.92 territory, because what I'm not excluding here is maybe a possible move back down if, of course, the rate falls back below the 200-day EMA. But still, the bulls could have a chance to step in near this upside line and drag this one higher. of course, keep your eyes on DXY as well, because if that starts sharply falling lower, then yes, of course, USD CHF could drift to the downside here. But again, the first point of support here is this upside line. I would say this is the more important one, and then we'll take it from there. EURGBP. So I've talked about this yesterday, so I'm still keeping the Fibonacci's here drawn on the chart. So if you can see here, we have this downside line drawn from the high of the 21st of December, and what I was saying, that if we get a break of this downside line, then yes, that's where I'm gonna get a little bit more comfortable with the upside. However, if I can say it, to get even more comfortable with the upside, I would prefer to see a push above this 23.6% retracement on the Fibonacci, because that's what we already kind of tested. From there, we reversed back down, we kind of drifted lower, and now we can see that we're flirting with this downside line again. Now, again, of course, normally the kind of the rule states that as long as the downside line continues to hold, yep, the trend is still kind of in that direction of the trend line. But again, for me, let's say if in order to go for some lower areas, I would prefer to wait for a drop below this 0.8616 territory right here, and then go for the downside. But given the fact that we're kind of really flirting with this downside line, so I'll give an element here of the doubt, but I will get a little bit, let's say if we do see a push higher, I will still get a little bit more excited with the upside if we get a push above this 0.8670 or actually 0.8697 here, or 98, or roughly actually 0.87. There we go. So we managed to finally squeeze this one out. The 0.87 territory, that's what we're going to be looking at here in order to go for some higher levels. And finally, EURUSD. EURUSD here, guys. Beautiful reversal. And again, this is the idea that I keep saying. We need that daily candle to stay. Yes, we initially saw the candle dropping below the 1.2023 zone. Okay, that was great news. I mean, the bears seem to be in control. They were also trading below the this 100-day EMA. However, the bulls kicked in by the end of the day and pushed the pair back up. Of course, don't get me wrong, the DXY kind of played a big role here. I mean, the dollar index started drifting back down, and yep, this is what kind of helped EURUSD here to push to the upside. However, we're still below this upside line drawn from the low of the 5th of February, and we're below the 21-day EMA. Yes, we could see a push higher, but probably, and let me just actually, you know what, let me just clear up this chart a little bit. It's becoming a little bit messy. And so the level here that I'm keeping an eye for the downside, still the 1.2023. For the upside, previously when I talked about this kind of this idea of a possible kind of inverse head and shoulders pattern here, didn't really work out. So well, we have to take that. So yep, sometimes that doesn't work out. But yeah, I mean, for me, for the upside, I would prefer to maybe wait for this push above the 1.2190 zone here, and then kind of get a little bit more excited with the upside with higher levels, and then maybe we could go even towards the highest point of January. But again, for now, guys, I mean, long story short, it could continue oscillating here around this 21-day EMA, so that's why be very careful. Yes, we could see a push higher, but if it fails, let's say, to break above the, or should I say, run above this 1.2190 territory and then reverses back down, then, well, we'll just get ourselves here a nice little range. For now, like I said, these are the two levels that I'm keeping an eye on. 1.2190 on the upside, 1.2023 on the downside. And then I'll take it from there. I'll still pick up on this one later on today. I'll pick up on the euro dollar, yep, today later on in my Trader's Tea Time, as I always do. I'll also pick up on the US 30 cash, so Dow Jones, and yeah, guys, we'll take it from there. So I hope you'll have a fantastic trading day today. Stay safe, guys. Have a wonderful, wonderful day. Always have your stop loss in place, and everything will be fine. Thank you very much, and bye-bye.